Welcome back. You're watching The Money Show, and it's time to get your portfolio queries answered live. Today, as an expert, we have Abhijit Choksi, founder Stockify.in. Abhijit, hi, good evening, and welcome to the show. And Abhijit, let's begin with Lata Selvam's question. This question is via email, and Lata says that she's a retired person and she wants to invest in best mutual funds. The amount that she's planning to invest is almost 40,000, and that's the SIP for 5 to 10 years. And she wants to know funds names from you, and also if PPF etc. are needed, because it's the retirement, post-retirement planning that she's talking about. Okay, so we don't have her on the phone line because I'm sure you want to ask a lot of other details, you know, in terms of her risk appetite, because time horizon of 5 to 10 years and what exactly is the goal. But then since we don't have those details with us, what kind of an approach do you think would be right for her? Are you trying to go very cautious and careful and conservative with her?
Right. So as Lata has mentioned that she's a retired person, so I would advise her to focus more on a balanced funds where the exposure to large cap is much higher. So I would suggest her to divide her 40,000 into four funds, namely 10,000 in each of them. For large cap, ICICI Blue Chip is one fund she can consider. Then SBI Mid Cap, Parag Parik Flexi Cap, and DSP Small Cap. So she can divide 10,000 in each of these four funds for at least 10 years kind of horizon.
Since we are talking about balance advantage category, Abhijit, what's the ideal return expectation that one should be having?
I would consider 13 to 14% as an averaged out CAGR one can expect from these kind of funds.
All right, so you've also recommended mid cap and a flexi cap and a small cap. What should be the proportion of her investment, you know, in terms of, because 40,000 is the amount that she's looking at. If I have to ask you to divide the amount in all of these funds, what would the division can look like in terms of ratio?
Yeah, as I said, 10,000 in each of them. So 25% of her capital in each of these funds would make more of a balanced mix. So equal in all of these four funds would make sense.
Investing in a balance advantage fund, should she be taking a blue chip also? Or if she's taking a blue chip, there's no need for a balance advantage. What do you say?
Yeah, the only reason I am recommending a blue chip fund to her because she has mentioned that she's a retired person. So in general, keeping the large cap exposure high is recommended in her case. So that's why I've added a large cap fund.
Okay, sure. Let's move on and let's take Ankit's question again via email. And all right, I think I have Ankit on the phone line with me. Ankit, hi, good evening. Ankit, hi,
Hello.
can you hear me? Hi.
Hello.
Okay, I'm so sorry. I have Mr. Visak on the phone line with me. Mr. Visak, hi, can you hear me?
Yeah, yeah, I can hear you.
Hi, you're calling from?
Actually, I am from Dubai.
Okay. All right, Visak. So, as per details given by you, you want to understand if 5 years is a good time horizon for maximum return, and you're investing 1,000 in each of these funds, which is Nippon Small
No, no,
Cap. You
I
can
am
have
I
UT.
invest, no, no, I am investing 10,000 per fund for three caps for everyone. Not one
10,000 in
person.
each fund?
Each one, yeah.
Okay. HDFC
So
Balance
I just
Advantage,
started this month.
Motilal Oswal Mid Cap, UTI Nifty 50, Nippon Small Cap. Is that right?
But UTI they rejected now because they saying my tax in the tax register my name and this PAN is different. So they said the other three are accepted now. Except UTI, everything is accepted for the first month.
Okay. You have asked, should I reconsider this after 1 year? I am not able to understand that line. You are already
No,
investing
see,
these funds,
see,
or you want to change your portfolio after a
already
year?
started investing. See, already started investing. So I just want to know if first of all, is this a good option or not?
Sure.
So somebody told me I can it better to keep it continue 1 year after that is changed. That's why I want to know what is the best option. Whether I should change to some
Versed are you,
some other
Visak,
fund.
how well
Yeah,
versed are you with equity?
I
Do
am
you
new. I am
understand the
brand new.
equity market?
No.
Okay. Okay. And these funds you've selected, you have taken someone's recommendation, someone has advised you these funds, recommended these funds to you?
Yeah, my friends advised me. That's why I selected.
Okay. And when you're saying maximum return, what's the ideal band of return that you're expecting?
No, what I mean is, if I invest for 3 to 5 years, what is
Understand that
which
we are
fund will
talking
give me
about,
more?
so you have to understand that we are talking about equity as an asset class where your time horizon has to be more than 5 years. 3 to 5 years will get you in a zone where equity can be slightly risky. I'm sure Abhijit might want to elaborate more on this, but then can your time horizon be more than 5 years? Can we look at 7 years? Is that okay with your financial plan?
As of now, there is no issue.
Okay.
I'll be able
What's
to.
the corpus that you're looking at? Say the time frame is 7 years. Okay, I'm just asking, trying to understand.
Yes.
Say the time frame is 7 years. What is the corpus that you're
Yeah.
looking to accumulate?
No, I don't have an exact amount wise on that. I'm just looking for the maximum return. That's the only thing. Instead of putting in a FD or something, what is the best option to give me more return? That's the only thing.
Sure. All right. All right. Let's connect with Abhijit now. Abhijit, over to you.
Yeah, right. Vishak, so you have a couple of questions, right? So first, I would suggest that instead of UTI, which you are unable to proceed, you can consider investing in SBI large cap fund. So that is almost equivalent of an index fund, right? So your allocation to large cap would be compensated with that. As Kavita correctly said, that minimum horizon should be 5 to 10 years, especially when it comes to equity as an asset class. And ideally, we suggest everyone to link a goal along with your investment so that you can monitor it, and then goal-based investment will make you more consistent with your SIPs, right? Well, that said, all the other funds in your portfolio seems good. Like I believe it's an overall well-balanced portfolio, except that UTI change you can do. The rest you can continue doing it, and make sure that you can do a step up also if you can. Like it could be 10 or 15% step up every year. So the impact of compounding would be massive over a period of at least 7 to 10 years when you will see the results. If you have any other question, please let me know.
Sure. All right. So that's an answer for Visak. And it's time up on the show also. Abhijit, thank you so much for taking time out and helping our viewers with their financial portfolio queries. For all the viewers, I request you to send across your financial portfolio questions on our WhatsApp number and email ID, and we'll get it answered live on the show by our guest. Thank you so much for watching. Goodbye.